Hi, welcome to my YouTube channel. Welcome to Let's Finance Your Freedom. So today we're going to be talking about about real estate and how people are able to finance their freedom through real estate and not having to pay their capital tax gain on their property when they sell their property. How people are able to get tax-free on their capital gain when they sell their house. So this is something called Section 121, and Section 121 they allow the tax exclusion if you are selling your primary residence. Let's say you bought a house a long time ago and it was $500,000. Keep the house and you live in it for at least a year. And the rules is that you need to stay in that property own that property for at least 2 years, and you're able to, let's just say 3 to 5 years later on, you want to sell the house, and a house gone up to, let's say, $800,000. You can sell the house, and if you're single, you're able to not pay tax on that property gain or capital gain of $250 if you're single, and $500K if you're married. So let's just say that's $300,000. $250 of that, and you're single, you don't have to pay, but you need to pay property tax. You need to pay the tax gain on that 50K that you above the 250 there. Same thing with married couple. So let's just say the house you bought with $500,000 now is like let's just say it was 1.1 million. Then that $500,000 you don't need to pay tax for it, but that $100,000 you need to pay tax for that. So that's the way that the rich people are able to accumulate money, get that money out after they sell the house, and they pocketed that $500,000 or $250, whichever way, and they not have to pay tax on that, and they use that money to go to the next property and buy another property and own it for at least 2 years out of the 5 years that they have the property. They don't have to keep for up to 5 years. They can live in it for 2 years and start moving on, and that cycle of selling their primary residence pocketed that difference in property or capital gain, and then they're gonna repeat the cycle every 2 to 3 years or so. Now there's also Proposition 19 in California. I'm not sure a lot of people know about that. Some people do, some people don't. So I'm just going to go over it, what Proposition 19 means, meaning that people who are over 55 or disabled, or they're a victim of a wildfire, meaning the house burned down or got burned then they able to sell their house. Also, let's just say they bought the house for $500,000, and then they over 55 years old, and then they want to sell the house, and then they sell it for $750, or they sell it for $1 million, for example. Then they're able to keep that property tax that was long time ago that they pay on $500,000 when they first bought the house. So that way they bought a house for $1 million, but they pay tax on the property that it used to be $500,000. So the one that they pay tax for $500,000, I'm just gonna make up a number. So when they bought the house for $500,000, every year they pay $6,000 in tax, for example. Then they sold that $500,000 house and they bought for $1 million. Then they're able to buy another property for $1 million and still pay the same amount of tax that they did when they were at the $500,000 house, which is $6,000, and their house is $1 million. The second house that they got is $1 million, provided that they sold their previous house $500,000 for $1 million. So let's take another example. For example, they bought a $500,000 house, and their house appreciate to $750, and they're able to sell it at $750. And they went and they bought another house that was like $800,000. So the $750. So how do they pay tax for that property? Is that the $750 of that $800,000, they're able to keep it at the low tax rate, and the $50K, above the 750, then they pay tax on the new tax rate. So that's another way people able to keep their tax rate low if they move around, in California, and they're allowed to do it 3 times. Thanks to Proposition 19, they allowed it to do it 3 times in a row after they turn 55, or they disable, or they're a victim of wire fire. So I hope that you're more aware about what's going on out there about real estate. Now, another way that you can invest into real estate without owning properties, and it's something some people know about, some people don't. It's going to be called the Reit. There's a lot of different ways, but I find it easier to make it, the more simple it is, the better it is. So there are index fund out there, there's Reit out there. You can find it on Fidelity, Vanguard, or you can find it on Webull, you can find it on M1 Finance, etc. Different platform out there, Robinhood. There's a lot of different plays, Schwab, etc. So the main thing is to get started. Don't get hung up on where you're gonna go. I personally use Fidelity and Webull, but you can use any platform that you feel comfortable. But you can buy something called Reit. And what is Reit? Reit stands for Real Estate, RE, so Real Estate Investment Trust, so IT, so REIT, Reit. So it means that these companies go out and they buy properties for you, or they buy property into that trust and they manage it, and they give you money in return when they have a profit. So they are required to give you back 90% of their gain to the shareholders. So that's a great way to get started. So I'm gonna put more links and talk more about these companies that you can invest in, but definitely it's a great way to get started, and you don't have to buy properties, you don't have to maintain the house, you don't have to worry about tenants and toilets, etc. The main thing is to find a good REIT company or stocks or index that you can invest in, and then just keep your money long term in there. Some people they want to balance out their stock. Some people invest into stock and like 50% and then 50% into bonds. I'm more aggressive and more into stocks, so it's more gonna be 80% into stocks and then 20% into REIT. And I don't really believe in bonds, so that's my take on how my investment is going to be. But I hope that it helps. These are my strategies, but that's what I'm sharing with you. I hope that it helps you to make your own decision on your circumstances, your situation, and do your own research on your investment. I'll see you in the next video.